Hi, and welcome everyone to the next episode of the Flow podcast, where we meet with industry leaders and talk about the market structure in the digital asset space. And today we're filming that in Singapore. We're quite lucky to have Xin Song, the CEO of GSR.
Hi.
Hi, great to have you here.
Thank you. Great. Thanks for having me. It's great to be here.
Thank you. So let's probably start with the explaining to everyone what is GSR. You've been in the market for a while. You have all the different types of activities within the digital asset space. So please share with our listeners what is GSR right now.
Yeah, sure. Happy to. Well, we're most known for being the oldest, the most established liquidity provider in crypto, right? So we've been around since 2013. We serve live clients, about 200 token issuers and exchanges today. Through the history, probably 500 clients, but really we've expanded to be much more than just a liquidity provider, right? We are a full service crypto capital markets partner. That sounds like a mouthful. It's not easy to explain what that means. The way I like to explain it, simple terms, is that look at our name, right? The joke is GSR stands for Goldman Sachs Retirees. And it's somewhat true because we have a couple of founders who were ex-Goldman and they set up the company after leaving. But we say that because think of what a merchant bank does in equities. So, a merchant bank, like Goldman Sachs, would invest in growth stage tech companies early in their life cycle to build a relationship. They would take them public, underwrite them, trade the stock as a market maker, and then they would serve the founders and they would serve the treasuries as a private wealth operator or an asset manager, right? So we do exactly that, just focus on the digital asset space and help the founders and the issuers through the entire life cycle of a token from inception to maturity. So that's what we do in a nutshell today.
Perfect. So it's in essence, it's not just the market making and liquidity provision, but it's this whole scope of investment banking services that you can cover, like from electronic OTC trading and then deeper into the more of a like wealth.
Exactly. Yeah. Think of it in three buckets. The initial one is more like an advisory business, which has a venture arm as well. So we deploy our own balance sheet and we advise on tokenomics, on how to prepare for being liquid. Once you're liquid, on market trading, but also OTC. We can talk about that later. Over-the-counter trading in other types of venues, and then finally a buy-side business, which is more like asset management or treasury solutions on a trade-by-trade basis. Yeah.
And right now, like these different parts, like how do you separate the business lines? Because like in the traditional markets, there's been all like long discussions about the Chinese wall. So how do you see that emerging within the crypto space as well?
Yeah, that's a great question. I mean, this is something that regulations came in to break up the universal bank model, right? The Volcker Act through the financial crisis. I lived through that. So I started my career in 2006. Intern, one of my first days as an analyst, the financial crisis was kicking off, and yes, there were conflicts of interest within that model, but we know that we came from that space. We come from regulated markets, so we've always been very regulatory forward. And that means, we were the first to be licensed in Singapore, right? We were the first to be licensed in Singapore and have the registration in the UK. So we know how to have internal controls to make sure that we play within the rules. And I think our reputation shows that, right? If you go on Twitter sphere, people don't generally have anything negative to say about GSR. It's come through, that 500 clients and nobody has really, any bad experience with us. In fact, most of them stay with us for multiple years and very long relationships. So that means information walls, that means, internal controls for not crossing and not self-trading, no wash trading. It means making sure we deliver on our KPIs, which is spreads, depths, uptime, and nothing else. Right. So I think that's pretty clear.
And for someone who's like been in the market for 12 years, I guess that's a quality stamp. So
yeah, it's not easy to do.
Kudos on that.
Thank you.
And let's talk about yourself personally. Like you've worked at BlackRock, you worked like a bunch of different firms connecting like the capital markets. Mm-hmm. And tell us more about how did you actually decide to move into digital asset space? Like what encouraged yourself personally?
Yeah, sure. So can talk a little bit about why crypto and then why I got into options trading within crypto, which was my first foray in crypto in 2018, 19, before I joined GSR. So BlackRock, I think people understand, I was within the systematic active equities part of BlackRock, so model-driven investing. And then I moved to a fintech startup in China called DealGlobe, which was about connecting capital from the East.
Yes.
In China, when Chinese companies were going cross-border and outbound and looking to acquire Western quality assets, right? Whether that's technology plays or fashion and brand apparels or even football clubs, etc. At that time. But the common theme between these experiences was one, kind of two-sided marketplaces, that a more efficient allocation of capital to opportunities, right? So BlackRock, because it was systematic, it wasn't the traditional stock picking, fundamental approach. It was, how do you build a model that creates more efficient markets and allocates capital to the best companies? And then, same for the platform, right? A DealGlobe to connect, Eastern capital with Western opportunities. So, crypto was the obvious kind of natural evolution of that, right? Taking that to the nth degree and making it completely peer-to-peer. That was very appealing. And then seeing also the different revolutions in sort of capital formation, both in the West and the East. So I lived through, for example, the whole equity crowdfunding trend in UK and the US, right? So there were seeders and there was Kickstarter, which was not equity crowdfunding, but product related, AngelList, which evolved and became something within crypto as well, and also in China when mobile payments and Alipay and WeChat Pay turned the society into something completely cashless within 5 years.
And this is like a phenomenal transformation.
Yeah, and we're kind of seeing that repeat itself in crypto, where in emerging markets in particular, where the financial infrastructure is not as strong, then you can leapfrog that with a better underlying technology, right? With blockchain as the rails instead of the traditional banking system, and people can access financial services. So I think that's what attracted me. I was seeing those trends in West and East and saying, wow, holy shit, blockchain technology is going to be a fundamental disruptor, at least within my lifetime. If I'm working at the intersection of finance and technology, I got to get in. So that's why I decided to make the plunge. A little bit late, 2018, but still, it depends how you look at it.
So it's never too late. I mean, someone might look like at the price of the Bitcoin this morning at like 120 and think it's like too late, but maybe it's not.
Very true, very true. And then why options? Well, I went in, I actually wanted to be a founder, I wanted to issue a project, I wanted to build something in terms of decentralizing asset management. That was the vision at the time, because I was a fund manager. And however, the infrastructure wasn't there yet, right? The infrastructure wasn't there. We hadn't had DeFi summer. Andre Cronje was able to prove that you can have, people with good trading strategies and be able to raise funds without the entire infrastructure of a company like BlackRock. But that was a few years after I was thinking about these ideas. The VC said, why don't you manage our money and generate market neutral returns for us instead, because the market was already puking at that time. And so that's how I started running an options hedge fund. Why options? You have to skate to where the puck is going a little bit, right? Spot was pretty widely traded, arbitrage strategies, but derivatives were just emerging. Perpetual swaps had not even been invented yet. We had futures, but we had options, and it was coin margin. So most of these funds were raising in Ethereum or Bitcoin. They had spare Bitcoin underneath that they didn't want to sell at the lows. So they said, can we invest in kind and generate Ethereum or Bitcoin denominated returns? And we were able to do that in derivatives. So that's how I first got into crypto.
Great, and it's a great journey. And what are the key lessons you've learned that you now apply within the GSR and overall electronic trading crypto space?
Yes, lots, many failures and iterations, but that's the whole process of building companies, I guess, right? And I think there's no shame in learning through your mistakes. So a few big buckets, right? One is just learning to ship product, work with engineers, although I've never really been a coder myself, write some Python scripts, right?
Well, luckily we have AI right now.
Yeah,
So.
exactly. That helps. But learning to come up with logic and strategies and then implement them with devs. Number two, finding scalable business models, that was hard, right? So Deal Globe, for example, that didn't work as an online business because it was trying to revolutionize M&A, right? It was kind of, that's one of the oldest businesses in the world. It's in...
And you need to do the offline due diligence and all of it,
Yeah, apart from, prostitution, perhaps banking is the oldest business in the world, for a few centuries old. But the point is, it's very unstandardized. The end assets are very non-standard, and therefore bringing that online is very difficult to scale. But there are, other business models that are much more scalable, right? Like what we do in terms of, systematic trading or asset management or systematic OTC in particular, where size begets size and profitability as well. So that was a good learning. And finally learning about myself and what I'm good at and what I'm not good at. I think one learning was I'm probably better as a 1 to 10 person than a 0 to 1 person, meaning, not full startup, but scale up.
Yep.
And so I found GSR was a great opportunity. It was 20 people, they were scaling up.
Exactly.
And finding that structure was, very lucky for me at the time. And we apply that to our clients now, right? I think, as an advisor, as a VC, being more of a coach than the athlete, I enjoy, by providing our network, by providing our experiences and advice. I find I'm better at doing that than being the entrepreneur themselves. It's very hard for entrepreneurs.
Creating something from thin air is sometimes it's just a completely different set of skills.
Exactly, but finding product market fit, as well as thinking about the capital markets piece, is really hard, right? So that's what we try to do at GSR, just to take that piece off of your mind and say, we can help you look after that part. You just focus on building.
And talking about scaling from 1 to 10, you've basically, the GSR have grown from 20 to 200 quite rapidly.
Yeah.
What were the key challenges that you faced yourself personally as a manager, right, and the organization overall?
Yeah, many. I mean, growing pains is normal. This industry is super volatile, right? But we've been through many cycles. We've been profitable in the entire 12-year history, apart from the year of FTX. And, we're able to reclaim those losses later. So, again, showing a lot of grit.
Hopefully
and
a proper mark to market. So
yes, yeah, exactly. But in terms of, how to scale without losing the kind of innovative part of the company, right? That sort of entrepreneurial lifeblood, that's really hard. I think part of it is anthropological. There are studies that, beyond 150 to 200 people, it gets really hard to have tribes in the wild bigger than that, right? Because you lose the connections, you don't know everyone by name, and the trust disappears a little bit. So we've been, cautious in growing further than that. But even when we do, I think there are ways to mitigate that, right? So you can perhaps carve off new business units as completely new entities and fund them almost like startups and say, we'll give you seed capital, we'll give you, runway for 18 months, come back and show us what you've done, and then we'll top that up. We've discussed that internally. Another way is we've incubated some projects. So for example, Katana with Polygon, it's DeFi optimized layer 2, and we've seconded some of our employees to them instead to do that. So kind of lending them out temporarily to work on new exciting projects that gives our employees motivation. It allows them to be innovative without needing to, change the structure completely or carve it off. So there are ways to do it, and that's been a big
you
learning.
need to be open-minded and quite flexible in order to, grow in that extremely rapid space.
Yeah, it's not easy. Yeah.
Cool. All right. So before we talk about the market structure, the last question about GSR, as you briefly mentioned the tribe concept, right? And I really like one of the books called Tribal Leadership, wrote by the founder of Zappos. Yeah. So the guy eventually mentions the concept about different levels of internal culture of organizations.
Right.
And kind of one of the highest level of those cultures of organizations or tribes is basically having some universal goal of what, as an organization, you make the world better. Like, how do you make the world better?
Yeah.
And basically, what's that universal goal for GSR?
Yeah, it's a good question. I haven't read that book. It sounds interesting.
Yeah, strongly
I'd love to
advise. I
check
think
it out.
it's quite a good one.
Yeah, I think our goal is you need a North Star, right? You need something that people gravitate towards. And I think it's to be the catalyst for accelerating that change to a faster, cheaper, better financial system, right? So we're not directly doing it ourselves, but we are probably the best facilitator of that process because we have the network, because we have the expertise, because we have the capital to help people to do that, right? So to be that catalyst for it, and that will help, adoption of blockchain technology for banking the unbanked in emerging markets, for, reducing intermediaries in the capital markets and making that whole process more efficient, making settlement quicker. We can do that. And I think that's probably our superpower. Again, more coach than athlete.
Cool. Yeah, and like this is what also always excited me about the overall capital markets industry, because it's the glue holding up everything, basically.
Yes.
Great. So now let's talk more about the market structure. And wanted to start with the electronic trading part. I mean, especially OTC. GSR has been a leader in the OTC space for many years. Most recently, you've enhanced your electronic offering, also with the partnership with Finery Markets, and we're quite glad to move that forward together. So share a bit more ideas about what opportunities in the OTC and electronic space you're looking into today, what inefficiencies you see, how do you see this whole space changing over the last few years and the next few?
Yeah, would love to. So OTC, our legacy business has been more high touch, right? It's the captive audience that we have from our market making and VC businesses, the foundations, the founders, etc. The VC funds themselves, helping them to perform basic risk management or perform asset liability matching, meaning you've got to pay for your rent and you've got to pay for your staff. The token that you hold or your treasury isn't always going to go to the moon. You might want to do some basic risk management and think about a little bit of hedging and making sure you can meet your obligations, right? So that's what we've done in the past, and that's generally been more kind of high touch, relationship manager based, pick up the phone or do it on Telegram and other chat platforms. And
historically, but just this point, I think it's very important, and to me as well, because I'm coming from electronic TradFi space like FX equities, and 5-6 years ago, when I was talking to lots of prospects in the crypto space, when you mention OTC, the first thing someone from the crypto space thinks is a Telegram chat or a Slack or a phone. No one thinks that OTC can be electronic and even more efficient than the regular on-exchange trading.
100%.
So that's, it's interesting how you see that perception changes, or what's your approach as well?
Oh, it's definitely changing very rapidly, right? I'm not an FX guy, but yes, you are, and you saw the EFX space just explode because it's just, more efficient, as you say, faster, cheaper, better. And crypto is moving in that direction very, very rapidly, right? Moving electronic. And so we have made a big investment into growing that business, because it's also a bet on where the net new users going to come from in crypto, right? Exactly. The next 100 million or billion users are probably not going to come directly through the centralized exchanges because of concerns about counterparty credit risk or regulations, or just pure stickiness of users, right? You bank with somebody, you use them, for 20 years, and it's very difficult to switch. The costs are quite high. So we see the new users coming from brokerages, right? The digitally native ones, first of all, but then also the traditional, equity and securities brokerages. So we're seeing, Schwab has announced it's getting into space. E-Trade, Morgan Stanley brand getting into this space. Well, we can aggregate liquidity in the market through the 60 plus connectivity that we have with centralized and decentralized exchanges and stream that to whoever wants to consume that liquidity, right? So that's got to be the direction of travel. And that's why we think that this is the next phase, and working with partners like Finery is a way to accelerate that, because institutions in particular, right? So previously I was talking more about retail coming in through the brokerages, but institutions are coming in through the prime brokerages, through custodians, through other channels, and they don't necessarily want to trade on a fully lit order book, right? They want to, put large orders through without having market impact, and going through an ECN and then clearing through a prime broker.
Exactly, makes total sense.
Makes total sense. It's how it's been done before. We're not reinventing the wheel again too much, right? Yeah. But it's a better way to transact with lower all-round costs and slippage. So that's what we're doing on the institutional side, but also then looking to start with spot, but look at how we can extend leverage as well and margin, and look at CFDs, and people are showing interest in that area too.
Yeah, 100%. And it will be also interesting to have your take on how do you see these two worlds overlapping or not overlapping with each other, because we have all the crypto native retail users and all the crypto native institutional players that are used to working directly with Texas, that are used to working with some decentralized exchanges. And then there's this majority of customers, I would say the next wave of adoption that is used to just use their local banks, their local neobanks, their local brokerages. So will you see, or do you expect the shift from these guys coming into the market through their traditional players and then probably shifting to some of the crypto native ones, or you see that flow going the other way around? And as soon as your local bank starts offering you crypto through the same account, then you might see the outflow from some of the crypto native ones that only have the crypto arm.
I think it'll be a bit of both, right? I think that convergence is happening very rapidly, and the players on both sides realize they have to try and compete with the other side. Otherwise, they risk losing relevance over time, because the underlying infrastructure is changing, right? And if all these assets get tokenized over time, then it will all become one common infrastructure, and we all play on the same level playing field. I think what's happening now is that the crypto native players are trying to provide offerings to the neobanks, the brokerages that you mentioned. For example, I see the exchanges also offering crypto as a service, CAAS, right? Some of the big centralized venues. Yeah. Binance, OKX are doing it. Different flavors of it, but same idea, right? How can you offer a turnkey solution to somebody that doesn't have this offering, or at the very least, workflow management tools? We've seen it in the securities world as well, to be honest. Saxo Bank has a similar product that they offer to HSBC for all of their brokerage on securities. It's nothing new. Whether the neobanks and the brokerages will actually adopt it is a question, because everything's a trade-off, right? This is speed of market access and go-to-market, but it comes at some costs. They might not be fully comfortable facing a counterparty like that. So there'll be fragmentation, and we will offer a different solution where we were happy for people to face us bilaterally. We have also strong balance sheet. We have very strong regulatory stack. We have strong processes as well, and that's another way to access the market. So I think that's TradFi players coming into crypto. It's also happening the other way, right? I think TradFi players are concerned about losing their users to traditional brokerages. Let's look at tokenized stocks, right? X stocks on Coinbase or Kraken.
Kraken acquires Ninja Trader, partnering with X stocks. It is desperately trying to win that niche, and I think that's the perfect strategy. So if you're not adapting like they do, then you have a chance of just losing your clients to someone who did that pivot.
Couldn't agree more. Yeah, because crypto native investors, they want to diversify as well. They want to trade other assets, and they want to have access to the model portfolio so they can allocate capital most efficiently, right? So they also have to compete too.
100%. Nice. Yeah. Well, we're also seeing some M&A activity in the space, so it would be interesting to see how most of these regional exchanges as well, right, pivot into brokers. I think that's the best way if you're running an exchange outside of like top 20 coin market cap, then you're basically better up thinking how to pivot either to the brokerage model or partnering with some of the TradFi side to diversify the offering, because it just makes so much sense instead of trying to compete with all the tier one exchanges.
Yeah, I couldn't agree more. Yeah.
Perfect. So let's talk about the infrastructural side of things. Being a market maker in the traditional space is quite capital consuming, just purely because the infrastructure is so mature and different, right? Like you need to have all the physical connectivity, because of the way how the traditional exchanges are operated with physical co-locations. You need to have like EMS, OMS systems. You need to have support for the clearing settlement side, and like it's been quite split across those different areas. Crypto space is different. Like exchanges, they started with cloud-based technology. So just in a way, the markets are organized in crypto, it's completely different. But how do you see these challenges on the infrastructural side in crypto, and how do you see this maybe changing in the next few years?
Yeah, you mentioned sort of capital efficiency. I think you're right in terms of the investment that you need into a TradFi setup for all the infrastructure.
Yeah.
However, crypto has other capital-related challenges, right?
Complexities, yes.
Yeah, the fact that it's pre-funded largely to start with, right?
Yeah.
The fact that, ideologically, blockchain should allow for atomic swaps, and, you therefore need to, have assets, available up front, in your wallet. That's how the first spot exchanges were designed, right? And still operate today. So that's pretty clunky, because that requires trading firms to park a lot of capital on venues. And that's costly in this environment, right? So there are now solutions evolving to handle
like prime brokers and clearing venues.
Yeah, tokenized money market funds that you can use as collateral on exchange, or even yield-bearing stablecoins, which are still developing, right? So that's one side of the infrastructure, and we'll see, what Genius Act allows and doesn't allow. I think it's kind of bifurcating the market a bit. But on the rest of the infrastructure, you're right. Like it's largely on cloud versus on premises, right? The TradFi model was always physical colo servers on premises, and the crypto model has largely been on cloud, and that has trade-offs as well. It's again faster and cheaper to spin up, but the latency is a problem. The connectivity is a problem. Generally, fixed APIs are not standard, and you see a lot of REST and WebSocket, and so that's been clunky. Even the lack of vendors, right, to get data. I think you touched on data earlier, but when we were starting out, it was just collecting your own historical tick data so you can actually do research. You just have to use the APIs, but the APIs are not that stable, so you just get gaps sometimes, and you can't just buy it off the shelf. Over time, it's evolved, and the vendors are appearing, and there are OMSs and there are PMSs, and we had to build all that initially to book our trades, to manage our risk, because it wasn't around at that time, but changing very quickly. I think then the on-cloud and on-premise is also emerging, right? So some exchanges offer physical colo, bare metal servers, and you're not just relying on, previously the best thing you could do was some sort of private connection between between cloud facilities, and making sure you're in the same facility, you're close enough, but you can only optimize to a certain extent. And there's and then when a top exchange, moves its servers, or there's rumors that some of the big exchanges are moving their servers to a different cloud venue. That creates a huge amount of change because people want to be as close to that location as possible. And that's very different to how things would have worked in TradFi with everything being quite static, right?
100%. And how do you see the trend? Do you see most of the liquidity and volume will stay in clouds, or you see, and you're talking to all of the exchanges, right? So what do you foresee some of them actually going physical?
I don't know. I'm not an expert in infra, to be honest. I think it depends on how fast that convergence goes with TradFi venues. So the project crypto legislation is going through the US at the moment is trying to create these super apps, right? Trading super apps. So the CME, you can come to the CME, you can just do everything there. So not just crypto, but commodities, and not just spot, but all the instruments, futures, options, everything that the US government wants to bring that all onshore. And if that succeeds, then you're gonna be tied to that set of infrastructure, right? So the FCM model and the physical colo. So it will be a little bit driven by regulations, I think.
Yeah, we'll see. Well, I'm a big fan of cloud-based technology because, as you mentioned, it's just easy to span off. It seems efficient with all the drawbacks on the latency side, but it's still, I think, the benefits are sometimes weighting the downsides. But anyway, we'll see. Hopefully, some traditional exchanges will also be exploring cloud-based technology more aggressively. So let's talk about the market making, and GSR is definitely plugged into all the major venues. What is your way in approaching the venues where you decide to provide liquidity? How do you do that assessment? What's important for you? And how do you see that changed over the last few years?
Yeah, that's not easy to do either, right? Because I think I mentioned earlier, the proliferation of venues is huge, right? And to your point on the last question, cloud, it does lower the barrier to entry for both trading firms and exchanges. You can spin something up relatively quickly in AWS instance, but that means the failure rate can be high as well. And for us as a client service driven market maker, we have to go where there is organic volume and demand, and we're not just a pure prop trading firm that can say just trade BTC Sol on 3 venues and we're done, right? That would be a nice, structure to have, but we're not set up that way. So we have to connect, and then the criteria becomes, I think it's 3 things. It's number 1, it's the infrastructure. Right. Number 2, it's the integrity of the platform, and number 3, it's the level of innovation of the platform. So 3 I's, right? That's neat. So info, I think we've talked about just basic table stakes and making sure you can connect and you're not going to get run over for whatever reason. You have the basic controls in there to be protected as a market maker. Number 2, in terms of integrity, that's the hard one, right? So integrity.
Not a lot of exchanges having SOC 2 kind of certification out there.
Exactly, and that standard is rare, but also making sure there's a level playing field, right? So, internal market makers, there isn't any of that activity where they're privy to more information, making sure that the right surveillance happens. As the whole industry gets more regulated, I think that's starting to come through. But I mentioned earlier, we have internal systems that prevent us from crossing between different entities and therefore wash trading, and that's illegal in any other regulated market. But, other surveillance like momentum ignition and spoofing and all of these things need to be controlled, but the integrity isn't always there on all venues, or at least historically wasn't. We've even invested in trade surveillance startups that are doing exactly this and selling to exchanges to improve monitoring and surveillance and flagging this when it's detected. I think that's a positive thing. So that's integrity. And then innovation, coming back to what we were talking about on capital efficiency, right? How do you solve that inefficient parking of capital problem? It's being able to accept tokenized money market funds as collateral. It's off-exchange custody solutions to make sure everyone feels safe and client assets are ring-fenced, so that if, God forbid, we had an FTX-style situation that, it's bankruptcy
of course,
remote, right? That type of innovation, but also in product innovation. So people have played with different instruments. Perpetual swaps is like a crypto-native invention, massively successful. Even the TradFi exchanges are looking at that now. But people have tried to play with other things as well, like perpetual options, and that never really took off.
Yeah.
Or, bullish, playing with an AMM and central limit order book hybrid model, where they seed, the liquidity and with AMM pools, and then people just come and take that liquidity. That bootstraps some volume, but is it long-term sustainable? Question mark. So that kind of innovation we welcome.
Yep.
Well, not everything sticks.
Yeah, makes sense. Well, at the end of the time, innovation is about doing some experiments. Like, not all of them work out, but it's great. It's great to see that. Nice. Now, let's talk about probably one of the main hot topics of this year, the stablecoin space. And like we've been fans have been talking about stablecoins for many years, and one of the first clients of Finery Markets actually were payment and processing companies that did cross-border payments, and they're using Finery Markets to hedge their FX exposure against stablecoins, which is like they don't really care if the Bitcoin is 10,000 or like 100,000. They just need to have a reliable like 24/7 partner. And historically, they were doing that with USDTs and USDCs. This year, we have this boom of thousands of new stablecoin issuers rushing into the space. So let's start with, what's your overall view on the stablecoin market? How do you see that changing? And then we can probably also talk about the payments.
Yeah, sure. Yeah, I think in terms of the overview, firstly, we welcome it. It's a better instrument than previous attempts to solve the same use case for cross-border payments and remittance, for example. So GSR got started as the designated market maker for Ripple, XRP, and that was one of the first intermediate currencies that was used for their on-demand liquidity program, which was exactly solving for faster remittance payments. So US to Mexico, globally, the biggest remittance corridor was $250 trillion a year, something like that. That started there. And we would make markets on a US exchange. Then the clients of Ripple would send it directly to a Mexican venue and then get the XRP out to Mexican pesos, right?
Yeah.
But obviously the asset
the
in
volatility
between, the volatility was
yeah.
huge, and that was our role to try and dampen that volatility. But this was, almost a decade ago now. Stablecoins replaces that, and I mean Ripple's issued their own stablecoin as well.
And it's almost like 1 billion, or it's over 1 billion in TVL already.
Yeah, exactly.
They did a great job, and
they have that DNA, I guess, and in understanding the use case, and they've tried. And we were explaining before, right? The failures and what you learn from that, I think, are valuable. So generally, it's a better tool, and it's also a better attempt than other things like Libra, for example, which people were concerned about that threatening the sovereignty of governments, right? Where stablecoins works within the existing framework. It actually increases demand for treasury assets, especially at the short end of the yield curve, and with interest rates coming down, government's able to refinance more cheaply. That's actually good for everybody. So,
exactly.
So everyone is happy to see the adoption. That's in the general terms. In the specific terms for payments, what we are trying to do is be the picks and shovels and not be kingmakers. We're agnostic as to who ultimately wins this. We will, again, like exchanges, plug into where we think there will be adoption, be the mint redeemer, and there are lots of incentives being offered for this type of thing right now. So we will participate in those, and it's a very, very competitive market. However, we ultimately will do the last mile of how do you convert on and off ramp, right? So getting from fiat into a stablecoin and stablecoin back into a fiat. And because we're regulated here in Singapore, we're able to open accounts, local bank accounts in many jurisdictions to allow instant settlement. We're able to get tier one bank FX rates and pass that on. So what we were talking about on systematic OTC,
Yes.
this is another leg of that business to stream that liquidity to payments providers or custodians or whoever wants to consume that.
And that, I think, an essential part, which maybe right now at this particular day, not all the issuers, the stablecoin issuers realize, but they need not just to have mint and burn infrastructure, which is pretty much solved, but they need to enable their liquidity and like partner with all the local clearing hubs and liquidity providers like yourselves, having this regulation, having those local presence, basically also becoming the clearing hubs and enablers for the issuers to make their stablecoins fully fungible.
Yes.
Because it's not just about issuing that one-to-one to US dollar or a Singapore dollar. It's about how do you switch between different stablecoins and how do you can like easily have, let's say, US dollar stablecoin hedged against euro or hedged against other currency. So like guys like yourselves are the important part, and that's also part of what we do with our infrastructure to enable stablecoin issuers convert that. So do you see the industry already understands all the challenges and complexities that we are creating right now with all the fragmentation of asset classes? Because all of a sudden, we now have Bitcoin not only traded on like few hundred venues, but it is traded there against different stablecoins, which just multiplies the liquidity fragmentation.
Yeah, it's a huge problem. I think you're spot on, right? It's not fully well understood, and plugging into those hubs is going to be important. You know, Fireblocks has one, for example. There are many others, but that kind of clearing network to achieve the fungibility of the assets, regardless of what the end stablecoin is, and that's where Finery and GSR will come in to try and reduce that friction. But it will take time. It's not that easy. It also, thinking about fungibility. The kind of tokenized money market funds on exchange, that's another problem we're having in terms of fungibility, because issuers, there are now many issuers, right? And they want to make that available as collateral on exchanges to mirror for trading, but getting back out into fiat is non-trivial because those underlying assets are not fungible, right? They're from different issuers, and somebody needs to go and provide that secondary markets liquidity. So
100%.
Yeah, if there's a liquidation over the weekend and the exchange wants to trade it back out into a stablecoin, you need to get from Benji or Biddle or Umint or whatever it is back into fiat or fiat equivalent, and that's not easy. So it's a similar kind of problem, like where the hub's going to emerge for this activity.
And I think that's being probably, it's not that well discovered, but the phenomenal success of Tether was partially because they were thinking about the secondary markets adoption versus the primary market. Like there's never been a direct, straightforward API for someone to go and mint and burn USDT to US dollar one-to-one, but they did an excellent job of creating lots of different secondary liquidity hubs, which enabled this fungibility so that the people doesn't need to actually redeem that token. They can easily trade that. And I think that's what underestimated by lots of the newcomers. They're thinking about this primary market, but in order to actually be successful and grow the TVL and facilitate the trading, they need to have those secondary markets enabled.
Yeah, so. You're right. I didn't think about it that way, but certainly for the trading use case, they did a phenomenal job in making sure it was listed at the relevant 100%. Venues or exchanges where most of the volume was going through. So, you're right. Yeah.
So it would be great to see how these new players are, coming and challenging the space. But it's exciting times.
Yeah.
Well, let's switch gears a little bit and talk about what are the other important parts of the digital assets landscape that you see needs to be changed and where the perception needs to change, where the focus needs to be within the next few years.
Yeah, I think misconceptions we touched on already a little bit earlier. When we were talking about challenging the sovereignty of governments, right? Because the name itself, cryptocurrency, is a little bit misleading. It's just a very narrow use case for blockchain, right? And yes, Bitcoin, as the idea of an alternative store and transfer of value, yes, it happened, but the use cases are very broad now, right? Just call it Web3 or digital assets in general. So I think there's a lot of misconception. But in terms of, for people outside the industry coming in, I'm saying, right? Yes. So I talk to my friends in TradFi and they still ask me, what is this? Should I, fund managers at BlackRock saying, should I classify this as a currency or a commodity or something else completely? And people can't wrap their heads around, that in a traditional framework, right? So digital assets, broad use cases. In terms of, are you asking more about trends and where the industry is going?
Yeah, well, maybe the trends, maybe some of the products that needs to be, changed, or I would honestly, I mentioned we were quite heavy on stablecoins, but I didn't expect that would boom this year the way it is booming right now. So maybe there's something that you think will be changing, and the next big thing of 2026 or 2027 would be, I don't know, RWAs or anything else.
Yeah, RWAs gets a lot of attention, right? And there's a lot of talk around it. I'm a little bit skeptical. I think we go back to trying to find out what pain point it's really solving, right? And how it's going to get real adoption, which is why we started with tokenized money market funds, because it's actually selfish, it's self-serving, it's a problem we have to solve a counterparty credit risk mitigation on exchanges, because these things can be parked at State Street and Signum and DBS and banks, right? And Qatar National Bank is doing one as well, instead of on the exchanges themselves. Number two, it's yield bearing, so makes us more capital efficient. Yep. So this is great. This is a fantastic first use case for crypto native traders to start with. And then how do we solve that secondary markets liquidity problem we were talking about earlier? So we're very deep into that with our partnership with DigiFT to try and create a potential hub for that kind of activity.
And how to make those yield-bearing stablecoins transparent for the users, right? Because most of them are wrap hedge funds.
Yes.
And how do you make sure that this hedge fund is better than the other one, and how is their counterparty risk properly managed?
That's a good point. So the tokenization process itself, you have to do your diligence into that, right? And there are many players in this market now. Securitized has been a big leader, but you've got Liberia is doing that with part of Standard Chartered Ventures portfolio of companies. You've got Equitize. The approach is all different, and it's is it a trust structure, right? Is it really bankruptcy, remote, all the things that we went through with off exchange custody? Our legal team looks at all the documents on this, and that's why we have a larger than expected legal team in the industry, because it's important. It's important 100%. To know that it's going to be safe if the worst happens. What is happening to make that process better is ratings agencies that come and score the quality of the tokenization process itself, not just the underlying asset, right? So the underlying asset, I think the risk is understood, but the tokenization process itself, how, belt and braces and safe is that. And I think we'll start to see more of these on-chain, equivalents of S&P, right? Or Moody's credit scoring type players emerge.
Yeah, actually, I think this is something for all of our listeners. If they are working at Moody's and S&Ps of the world right now, maybe that's time to think about how do they solve the on-chain and digital asset side of things.
Yeah.
Nice. Perfect. So let's talk about what are the next steps for GSR in terms of global expansion. What do you guys are willing to change and build in the next few years?
Sure. I think geographically, we can start with that, and then maybe, business line expansion kind of ties into that a little bit as well. So geographically, within Asia, South Korea is particularly interesting, right? With Token 2049 is happening this week. Last week was Korea Blockchain Week. Back to back, it's very, very tiring, but I think it's been great to see the level of interest in South Korea in particular, because it's opening up as well. There's a new administration, they're, more crypto-friendly. Institutions will be allowed to trade for the first time. So, we have a joint venture already set up there, and we are trying to do this in as regulatory forward way as possible, right? Because that's how we've always done it. We've been planning this for 2-3 years. It's been a retail only market for that time. We're not going to go in there and say we're just going to onboard and start trading, because market making can be a dirty word in Korea, because what they experience in equities and FX and manipulation that we saw there. So we're engaging with the regulators, the FSS. We met with them last week. We're also educating them about the pitfalls and dangers in crypto. But that's a huge market, right? It's 50 million people, of which 30% trade crypto. They're on the metro every day, actively trading crypto. 15 million people. It's a big potential. So Asia is probably South Korea. We see that as the most interesting market. The Middle East, of course, we are making our plans there. Many of our peers and partners are already set up there. But the US is the big elephant in the room, of course, right? With the new administration, with regulatory clarity, with the move from enforcement towards facilitation. I think that's all been really positive. So what we've done there is we just announced very recently that we set up we've acquired a broker-dealer shell in the US, and we plan to acquire the sub-licenses to perform different types of activities, including some of the things in the early stage of the life cycle that we talked about at the start. So fundraising, right? Again, capital formation. How is that going to change in the future? Should it be back to the community-funded ICO days, but in a regulated way? We think so, because the last few years has been VC-funded model, high valuations, high FDVs, low free float, and then when they get listed, the performance generally hasn't been good, right? We think the alternative, better model is to allow your community, your real users, the sticky ones that are going to hold for the long term, to be able to invest and enjoy part of the growth at lower FTVs, but do that in a regulated way. So, Republic is doing this in the US already. Legion is doing this in Europe, the Mika license. Echo is a different model. It's a syndicated model, more like AngelList, but similar idea, right? Let your community participate. So in the US, we are actively looking at a private placement type license to allow us to also facilitate the fundraising part of it, right, and hold the hands of our portfolio companies through that process. That's pretty exciting. It gets back to what I was talking about earlier, equity fundraising, but reinvented in a compliant way.
And basically challenging all the traditional banks, because that leads that to my next question is, there's a few analogies in the traditional asset classes like FX and equities, where for many, many years, those asset classes were dominated by largest banks. Largest banks were the key participants. And then in FX, XTX disrupted that model with just the algorithmic approach. This is also a phenomenal success story of how a non-banking provider became one of the world's largest FX providers. The same thing in equities, like how the Citadels and Virtus and Jane Streets of the world disrupted not just the banks, but also the exchanges themselves, like pushing that volume towards OTC in the equities. And do you see the same trend happening right now with crypto participants like GSR, that you guys are eating lunch of, started to eat lunch of some of the traditional players and slowly getting that share, especially where we see more, let's say, tokenized securities going on-chain, then it's kind of native that you guys are picking up that business. How do you see that happening?
Yeah, I think you're spot on, right? With every kind of asset class migration into fully electronic trading, then it gives opportunity for a new player to disrupt, right? And traditionally it's been the banks that provide liquidity, but as you said, in the latter years, it's been the non-banks that are developed into specialists in each area, right? So equities, You mentioned the names, options, Susquehanna and like probably have some advantage there. FX, XDX have just come in here and dominated completely, right? With crypto, yes, we think there's an opportunity. There has to be, right? One or many of the existing crypto native trading firms should be able to develop a long-term sustainable advantage in this area if they are able to follow the model of Jane and XTX in terms of building a very strong systematic internalizer, right? So if we talked about scalable businesses, this is a scalable business where the more flow and the more risk that you're able to consume and then sit on that risk and then exhaust that risk very efficiently, the more profitable this can become because you end up being able to cross more of that flow and not pay the spread. And that's something we're actively working on. That's something some of our peers are actively working on. And as that convergence between securities and digital assets happens, naturally somebody will emerge as a winner that is able to then do this in equities and other areas as well. But it's not easy. The model is still primarily agency-based or riskless principal, people back-to-back. People don't internalize that much right now.
Yes.
But it's starting to happen. And some of our peers are actively doing this. We're actively looking in this area. And we're set up to be 24/7, right? Some of our TradFi peers, we see them on venues where they're not able to quote, over the weekend. They're not able to serve some of the long tail, assets that are smaller market cap. And so that gives us some time to build some moat because we're not complacent either, right? The traditional players have a huge advantage in some areas of their research and their technology. So we have to use that window to catch
100%.
up and leapfrog them, hopefully.
100% well. Looking forward to do that together.
Yes.
So speaking about some of the lessons, you've been in the crypto for like over 7 years, like professionally. Is there one thing that you wish you would learn and you would know when you just joined the space?
That's a hard one. So many things, I guess, but if I had to say one, I think it was like a Bill Gates quote, which is people always overestimate what's going to change in 2 years and underestimate what's going to change in 10 years or, the long term. I think that's very true of crypto, right? And I came into the industry very naive as well, right? Saying, this is going to revolutionize the world. It took way longer than people thought. It took many cycles. It took people understanding risks better and, setting up regulatory frameworks to allow the healthy development of organic markets in this asset class for that to happen. But now I think we're at the tipping point, right? We're crossing the chasm into mainstream adoption and, genuinely in 10 years' time, I think things will be drastically different. There'll be completely different underlying infrastructure. But people are still getting a little bit carried away and saying within 2 years, things will have changed very, very dramatically. I'm not sure it's going to be that quick. The administration is trying to do that, right? In the US, the midterms are coming in less than 2 years. But real adoption, we talked about tokenized, other assets, private equity and debt. We see that happening, but these are just experiments at this point, right? Apollo, ACRED, who is going to invest in that? What problem is it solving? I think it's great, but getting that into the hands of crypto native foundations so that they can diversify. Yes, it might happen, but it's going to take some time to convince them. And 2 years, maybe not too much will change. 10 years, I think a lot will change. And I've learned that the hard way.
And we're both quite biased on that, but that seemed to be changing the world. And just lastly, we have our question about the books that you can recommend to some of our listeners. And ideally 2 books, like one on the professional side of things and another one something personal.
Yeah, I only read non-fiction books. My wife and I are different in that. She only reads fiction, she likes to tell stories to our kids, but I only read non-fiction to them. So I can't think of one off the top of my head for understanding like us as a business better, right? GSR professionally as a business better, but in terms of how I try to apply myself day to day to business, which is a little bit personal and a little bit professional. One book I read recently was Leaders Eat Last. So it's a Simon Sinek book. It talks a little bit about, again, tribes. We were touching on tribes earlier, right? The idea that you have to create a circle of trust with your employees. You have to create psychological safety so that they can take risks and they can be innovative. So we try and do that day to day in GSR and say, there's no bad idea. Anyone can submit a one-pager idea and it can be a new business. And a case in point was the digital asset treasury business that we created essentially from 0 to 1 within the last 6 months. Well, we started thinking about it in November, December last year. Our head of research came to us with this idea to create, a digital asset treasury for Solana, because at that point it was just Michael Saylor with strategy and Bitcoin. But we created the playbook for that, right? And he then went over to Upexi, which is the company that we chose as the entity for that, as the chief strategy officer. So that's just an example of trying to create some psychological safety to allow employees to thrive, and as management try to sacrifice your own sort of comfort and safety to an extent to allow others to be at the forefront a bit more and not feel afraid to take risks. I think I like that idea. Yeah.
Perfect. Well, Xin, thank you a lot for that discussion, and looking forward to GSR Finery Markets partnership. Hope everyone enjoys. That's great podcast.
Thank you very much. It's been a pleasure.
Thank you.
Thank you.